Hello guys, welcome back to my channel. Happy new week, starting the week again. So in today's video, there's something I'll take into consideration, and I say that it's going to be of great help to many, especially beginners. So I look at the chart because during the weekend I was doing a lot of back testing on some pairs, and there are things that I've noticed, although I've known them before now, but I believe that many have not been paying attention to it, and I feel I'm going to share those things with us so that we can try as much as we can to, pay attention to those things and add it to our confluence whenever we are making entries or taking trades in the market. So what I have to share with us is how we can trade chart patterns. Okay, how we can trade chart patterns. So there is a statement that said that price is fractal. All right. So what that means is that whatever happens on the higher time frame also replicates itself on the lower time frame. All right. So before now, price keep repeating a particular pattern, and studies have shown that price action is price action is strictly based on studying historical price movement to predict what you think the market will do. So I'm just going to give a schematic explanation of how you can, identify these chart patterns and how you can be able to trade them. All right. So before trading any chart pattern, there are some key things you need to know before you brings your idea to the kind of pattern you want to look for in the market. The first thing is structure. Okay, I'm a structure trader, and I pay close attention to what market structure is saying before any other strategies can come in. Okay, so what do I mean by that? Structure will help you to identify the trend in the market. Okay, you have to determine your market trend, like what kind of structure is the market forming. So by identifying the trend in the market, you can now look at what your bias should be, whether you are looking for a sell or you're looking for a buy in the market. So if you have, the market can either be doing any of these three things that we'll be mentioning now. It's either a market is buying, which we said is in a bullish move, or the market is selling, which we say is in a bearish move, or the market is consolidating. All right. So these are the three things we can or the three movements we can actually see in the market. And then when we talk about a bullish market or bearish market, there are two moves you can see. We have the impulsive move and the corrective move. The impulsive move is what a trader should, look for. All right. Because it comes with, a great impulse or volatilities that helps it to move rapidly. Then secondly, the consolidation phase is something that I don't encourage beginners to look at, because when the market is consolidating, it can be very, very tricky. You don't know when you are going to be stuck out of the market, because it's not giving you a directional bias that, okay, this market is bullish or bearish. All right. So you have to pay close attention to that. So without wasting much time, let's dive into how we can actually identify the trend. Okay, so in the case of a bullish market, the characteristic of a bullish market is that it must be creating series of higher highs and higher low, breaking structure to the upward direction. So we have it in this form. Let's say this is a low, then we have a high, then we have a, a higher low, and then a higher high, a higher low, a higher high, and so on and so forth. All right, and so on and so forth. So now that you've been able to identify, for example, you come to your chart and you can see the market doing something like this. I think I need to change the color or make it broader for you guys to see. Okay, let me make it green and change it to line. Okay, let me change it to line. All right, so we have it in this form. So this is a bullish market, because you can see that the market is breaking structure to the upward side. So if you identify that, okay, this market is bullish, what then are you looking? Remember, in identifying your market phase, or whether being a bullish state or a bullish phase or bearish phase, you have to go to the higher time frame. As a day trader, for me personally, I look at the daily and the 4-hour for my main trend. Okay, so you have to look for the ones that works for you, but make sure you're looking at your market trend or your market overall bias on the higher time frame. All right, so now that you've checked that the market is bullish, now what kind of chart patterns are you looking for in a bullish market? So there are different chart patterns, but there are few ones that I trade myself. So which are the likes of flag. Okay, I have flag. I'm going to list them here. This is flag, can be any of these things. So it is flag is one of the most important things that I have I've been paying attention to in the market, and how I trade them is what I'm going to show you. So like I said, the first thing is to identify your market trend. And how do you identify your market trend? For me, if I meet a market in a state like this, the moment I come in, I try to identify a break of structure, which is the major characteristic of a bullish market. That is, if I'm looking at the bullish scenario, so this is a break of structure. We call it BOS, BOS, signifying a break of structure. Okay, then the next thing is to identify my market range, which is here, and here. Okay, now when you come down to the lower time frame, which is my entry criteria, how you will notify a bullish flag is it will form something that looks like a descending wedge. I will show you. So this is what I mean. When you come down to the lower time frame, what you will see here is something like this. Okay, so you see the market creating something like this. All right, this is how you are going to meet the market on the lower time frame. And this is what, so the kind of structure you're seeing here is actually known as a bullish flag. Okay, so what a trader, or what I do most of the time whenever I spot it, is I'll take my line to, join at least 2 points or 3 points together, depending on the possibility. Remember, the higher the number of touches, the more valid that particular point you are looking out for is. So I've joined this. I'll try to join this as well. The moment you are able to join all of these points, there are two ways you can actually trade this. Remember, what you want to do now is to spot your entry. Now, when you look at this particular zone, there is something more like a resistance around this region. So what you do is, I will now look out for my rejection candles. Okay, I'll look out for my candlestick confirmation, and then I'll make my entry from this particular angle. This is where my entry is going to be. I'll enter from here after seeing my confirmation candles, because here there is a confluence of this trend line here, and there is also a support line. So I have reasons why I can take this trade, but this is how you can trade a flag. Okay, and when you're taking the entry from this particular zone, you will target this particular point, because you are anticipating that the market is going to create a new. Okay, so this is how your stop loss is going to be. This is about 1 to 6 risk to reward. All right, this is great. All right, this is a good trade to take. So this is how you can trade flag. Okay, this is how you can trade flag. Like I said, there are a lot of them. I'm just going to list them. I may not explain all of them, but you have to I'll just maybe teach you how you can trade the flag. Probably in the next video, I'm still going to do more of it. So make sure, if you are new to this channel, ensure you subscribe to it. If you have not, make sure you subscribe. Don't forget to subscribe to this channel. There are other videos of market structure, especially if you have not watched those videos. Make sure you do that. These are the videos that you can see. There are educative videos here, proper way to draw your support and resistance. how to identify market change, multi-time frame analysis, how you can start marking out your structure from higher time frame down to lower time frame. So if you have not watched some of this video, make sure you visit you subscribe and then go back to watch those videos. They are very, very important. They're going to help you. Also, you need the knowledge of candlestick anatomy. This will help you to know when a particular trade is ready for entry. So all of these things are important things that you can actually watch and learn more. So that about that. Also, we have a Telegram channel in this link, so don't forget to join and participate. For instance, we have some trade that we took today. Okay, this is an example of a bearish flag. You can see that we are able to draw this and we're able to take an entry from this particular zone to this particular point, although the market is currently retracing. But based on this, we are anticipating that the market is going to come all the way down to take our TP, which is always at these zones that is already marked out. Okay, so we have all of this trade we are dropped in our Telegram group. So we dropped most of these signals in our Telegram group. Okay, so this is how the Telegram group looks like. Okay, so these are some of the trade we took, and these are the setup, these are the signal that we've dropped. So ensure you subscribe to the channel as well so that you can also participate in content like this. All right, so let's continue with what we have. So that is how you can actually trade a bullish flag. So in the case of a bearish flag, when you are trading a bearish flag, you want to identify that in a bearish market. So you see the market having a move like this. See the market having a move like this, a high, you have a low, you have a lower high, you have a lower low, lower high, lower low, lower high, lower low, and then suddenly you identify that the market start creating substructure. You start creating substructure like this. So this is how it looks like, something like this. So at this point, you might be thinking maybe the market has changed from being a bearish market to a bullish market. So you have to understand the concept of range for you not to be carried away by some of these things. So range will now help you, just like I did here. I was able to identify my market range after knowing that this is a bearish market by studying market structure. Like I said, there is already a video on market structure, so make sure you watch it. The next thing is now the recent market range, which is here and here. Then after that, you have to mark out your points. You have to mark out your points. So once you are able to mark out your points, then you now look for how you can take the entry. Look for how you can take the entry. So my entry is going to be based on candlestick rejection from this point, from this trend line. It's going to be based on candlestick rejection from this trend line. So let's advise you to make sure you watch that candlestick anatomy video so that you know the type of candles to be looking out for. So at this point, I'm just going to take my trade all the way down. I'll take it all the way down, targeting the nearest lower low in the market. Okay, so this is how you can actually trade chart patterns. Like I said, there are other chart patterns, but I pay attention closely to flag. And I told you there are two types of flag, which is what? The bullish flag and the bearish flag. Okay. There are also head and shoulder patterns, double tops, double bottom. I'm going to do a video on how you can trade some of these chart patterns. So I hope this video is helpful for you guys. Make sure you like, subscribe, and share for more educative content like this.